So this coming week, we have CPI, which is probably the most important economic data coming out this week, this Friday.
Will it come out with the shutdown?
It says the first important one coming out.
Okay.
I didn't read the.
There's like other report, like non-official ones. They have.
We got to get on our. You and the research team. You got to get on your act. You got to have your own report.
That's true.
We can try.
That's actually that could be a huge market for us.
There we go. Come
out with the research team CPI report. Yeah, we can do that.
Breaking news.
With CPI and PPI and everything.
We got to have you guys like man on the street type thing, right? Because you got to interview people to ask them if they feel good about their job,
Wow, when was the last time?
Prices, you got to go to the grocery store. You have to go to each grocery store. Figure out where the Campbell's soup is more expensive, that sort of thing.
Great, I love talking to people after doing the research for 12 years.
But the White House did just say this from the people in my YouTube chat. The shutdown could end this week.
Really?
It could end.
Really? Who knows? Who knows? So
not.
This actually leads to my second point. So the government shutdown actually into the fourth week. So it will be the second longest in U.S. history by Tuesday. So the second longest one is 21 days, which is 1995 by Bill Clinton. So tomorrow is going to be 21st day since this shutdown, right?
Okay.
So passing Tuesday, this is going to be the second longest one.
Yeah.
And we have tons of earnings. We're going to see the names in the last slide.
We do have tons of earnings coming, but I know you'll get
a lot.
Yes.
Yeah. All right. So what happened last week? The indices pretty much all green. You see these big numbers around 2 to 3%. It's not like they keep going higher. It's just like a bounce from the dip from the Friday before. So it was actually went up and down in between the weeks. But
the dip was bought, as they would say.
Yeah.
Yes. Again. It was a one-dayer.
Damn, we almost had him.
We almost had him. That's right.
Yeah. For expect move, next slide. Fortunately, we actually landed in the expect move, 2.4%. The expect range was 2.5% because of the lifted VIX the week before. It was closed at 22, almost 22 the Friday before. The last Friday, we closed at 20.8. So the expect range of SPX is about 1.9%, which is still much wider than we normally see. Much wider. Normally, we see 1 to 1.1%, 0.9, tradable.
Yeah. So now we'll be taking a look at maybe the 0-day trades again today. You got high implied volatility, market going higher. If market continues to go higher, volatility should contract. Should help those trades. We'll take a look at those today. That's what I read from this.
Goes with our VIX and VVIX study from last week.
That's correct.
This is a good time where volatility is not super, super hot. It's not on the tail end of volatility, but this is kind of the spot where premium starts to look juicy. Where you don't want to be on the super low or the super high. It's right in the middle. Yep. This is the spot. So.
Yeah.
But in between the intraday VIX actually almost hit 29 or something, right?
Well, I think it was mostly pre-market because you had basically, the move was done in the first hour or so.
Yeah.
Yeah.
I mean, you guys had a 40, 50 point down move and then it was over. So.
Talking about the IVR, because the IVR of the Friday before is so high, so actually dwarfed the IVR last week. IV is actually still pretty high right now, but the IVR actually reduced. So the only green ones we saw is the gold and the Bitcoin. Gold actually went up to 94%. It's pretty high.
Yeah, gold price and volatility. You like trading gold? I stink at it. It's the world is your oyster there.
It is so expensive.
35% implied volatility in gold, in the near term.
It's usually in the teens.
15, 16. That's your best case.
You're smiling. Did you get?
No, I just remember there are so many articles and tweets that I saw over the weekend, the past couple of weekends. You actually see more people posting gold trade, gold ETF, gold whatever.
That's what I was saying. But isn't that usually our top mark? when everybody starts posting that because
Everybody's a
nobody,
genius.
there was nobody talking about gold for the last 2 years.
I know.
The market was
No
up
one.
1 billion% and gold went nowhere. Nobody said, I love gold here. And then all of a sudden, gold has a move, and then everybody, is talking about 10, 15, 20% allocation to gold.
There's a ETF or whatever mutual fund says that they actually use a dollar average, like a monthly investment, as a strategy into gold. I don't know. That's this is commodity.
I just sold a micro gold.
Oh, good for you.
Yeah,
Good for you.
as
You
we
trading
talked
it nice on Friday, too.
We had some nice scalps on it. We'll see.
Yes.
We'll see. If usually you don't when you go back for more, that's usually when you give it up. Where they let you get it. You get a couple and you think you're a superstar, and then you go back for more. Like I'm going to take some seconds on that, and that's when you really get spanked. So we'll see. But I got a 123-point buffer today versus Friday.
Yes.
Because that's what they're up right
Yep.
now. So I didn't hold through the weekend.
Okay.
So we'll see.
Beautiful.
Yeah.
Very, very nice.
Yeah.
Very nice.
If it doesn't work, I blame you, Kai.
Okay. Did I give you the micro? No, not me. So this is the historical volatility versus the implied volatility in SPX. You can see the implied volatility was high, or like it went higher, but the historical volatility actually hit the highest point since this May. So that's why we experienced the wider swing range, especially for zero DT. We definitely experienced that testing on both sides, right? It was like went down 50 points on Friday and then keep going up afterwards. It was kind of scary if you trade zero DTs. Even though they give you rich premium, give you wider range, it's still you gotta be careful.
You know that if you're trading 0 days, you should expect to have some tail events. You should expect to have some max losses.
Well, if you sell something
of
with a 20-ish delta, there's a 40% chance of a touch. Just using round numbers. So,
Yeah.
I mean, it's in your favor that you won't be touched, but it certainly can happen. I mean, you have to play for that. It's not like a 5 delta option you're selling. There's a 10% chance of a touch. You don't necessarily feel that that's going to happen to you today because it's so far away. It still can happen, but it's going to be a lot less. But I think just about every 0 day trade that we've traded, I think we traded 3 or so of the last 5 days, we had a chance to manage them for a profit, which we did. And that intraday, it touched your strike.
Yeah,
I mean, that's volatility there. So.
And that's the next.
I agree with you
realm.
guys. Friday's quote is it's a trader's market.
Traders market.
For sure.
Yeah.
Yep.
You have a lot of opportunities to manage your position, even though you got to test it multiple times.
Yep. Totally.
So the daily volatility was actually 1.7% last week, last 5 trading days. The long-term average is 1.1%. If we're looking at a medium number, last week was even higher. So last week was pretty volatile. Okay, so next one is the gold. I just want to try to show you the performance in the past years. You can see that big bar on Friday, right? Nothing too much to talk about, but I just want to show you this crazy.
Up and to the right.
Yeah.
It's just.
Yeah, don't ever show this again. Okay, good job out of you.
I bet there are a lot of people is going to jump into the selling premium camp for gold after see this 94% IVR.
Yeah, listen.
GDX or
Keep it small. I mean, you can go into. I mean, listen. I haven't traded GLD in forever. It's certainly a tradable place now. Markets are a little bit wider.
it's too cheap GLD, right?
No, I mean, it's
premium
almost $400 now. I mean,
Yeah.
No, I mean premium wise before.
It's gotten
Before.
better.
Now, what's that?
Yeah. No, I mean, volatility is higher now. It makes it more interesting.
Makes it totally more interesting.
Yeah.
It's going to be interesting to see if volatility stays bid.
Yep.
Even if we have a little bit of a pullback, because you typically have that reverse vol skew where as gold goes up, volatility tends to expand.
Exactly.
If it comes down, you usually see volatility contract. I'm wondering if because of the move that we've had, if volatility kind of stays at a little bit of a higher floor for a period of time.
Yep.
Like we were talking about being 14, 15, 16% implied volatility. What if the new, next year or whatever floor is 25%? I would think that you would see that, but who knows?
Okay, the last chart I want to show is Bitcoin. So Bitcoin and its implied volatility. So Bitcoin actually dropped to the lowest point since same since May. The implied volatility actually went up. So this gold and Bitcoin are the only major assets we saw the implied volatility or IV rank went up last week.
Well,
Traders market.
Bitcoin up $4,000. I mean, but it was a slow march lower. I mean,
Yeah.
it just stair-stepped lower and lower and lower. And again, we're up at 111 again. That's where we used to stop and go back up to 125. Got a lot of charts telling me might be some headwind here. So,
Are you bullish? Are you guys bullish or bearish or neutral? Or you don't
bullish long term?
October.
Bitcoin. October.
October.
A little bit of
October.
long Bitcoin.
Yeah.
Need a
If
little bit more.
October doesn't pan out, we might have to get rid of our very own Ryan Grace here. Has us all in the October bucket.
Yep.
All right. IV, the next slide. So the best and worst performers in the S&P 500, very liquid ones. AMD, AXP had the earnings last Friday. Starbucks, Airbnb, and Wells Fargo. So the upside move is all lower than 10%. IVR is much higher because of one reason is the overall IV market IV is high, and also the earnings season is coming.
Yeah,
So don't get confused about the high IV market. Sometimes you got to check the earnings date.
Yes, you do. Yes, you do.
that Oracle move up, $30, and then the next day down $30-$40 on another projection out to 2035 or whatever the number is. Huge moves, crazy.
Huge moves.
Yeah, downside hood lead the biggest down move 8%. Still, most of them are falling between 5 to 8% downside. Oracle, down 5%. Yeah.
Yeah. We got positions in a lot of these. I mean, we traded Starbucks. We have a position in AMD. No hood or coin. We got Oracle in there. Hood and coin. Those are probably
You guys
ones
haven't
that we'll-
traded coin for a while, right?
No, we haven't traded coin for a while. I don't know if you've looked at the markets in coin. If you go out to November with 32 days to go, they got dollar-wide markets in coin. Makes it a little bit harder to trade. Now you've got $2.5 wide strikes. Might make it a little bit more interesting after expiration. So be good.
Yep. So earnings review from last week. None of the companies had more than 10% double-digit move. So I just put some numbers there. American Express and Wells Fargo both up 7% the day after. So nothing too excited.
Yeah, we didn't really trade any of these. I don't think
None of these? None.
We did United. And we did TSM.
TSM, yeah, for sure.
Yeah.
None of the other banks.
No,
Really?
I mean they're just lower volatility, and I don't know. The earnings that come out in the pre-market are usually earnings that I just don't trade because I like to watch movements in the after hours. So I've passed on most of these.
Interesting.
But we're coming up to the sweet spot. You got Netflix and Tesla, and then you
Yep.
got all the big name stocks next week.
Exactly. So we start to show again. We bring back the earnings season stats. So for this season, the third quarter, so far we have more than 100 companies announce the earnings. Can we go to the next slide? And so far we have more losers in the past week, 55%, and less winners, 45%. And overall, the last week, the average return the day after is negative 0.2%, which is not actually a big number.
Right, small moves after the market, after
Yeah.
the earnings, what you're saying.
But this can be
Maybe post-earnings trades.
Yeah.
Yeah, post-earnings trade. So this can feel a little bit different from the earnings report, whether they beat the expectations or not. So last week, the major banks beat the expectation, but in general, we still saw the negative return.
Got it.
Yeah.
Got it. All right, good.
That's a surprise. I mean,
Little bit.
going into the meat of earnings
A
season.
little bit. Maybe that means the next.
this
one
plays
has-
out,
these have been fringe players
Yes.
too. These are not your players yet. So
Right.
take a little bit of a.
If it plays out like this, though, you'd expect markets to be lower.
Yep.
So
The last one, so the upcoming earnings this week, we have tons of earnings. Definitely the biggest one or most traded one are Netflix and Tesla. But also important ones including Coca-Cola, Ford,
IBM in there.
IBM. We have the
GM.
Southwest Air, if you trade airline, Southwest and American Airline, all these. Oh, and also this afternoon, Zion's, the regional bank, went to the problem, is going to announce their earnings. I don't think that's. I checked the market. I don't think that's liquid enough.
Yeah, you only have monthly expirations there,
Yeah.
30, 40, 50 cent wide markets. I don't know. There's so many other interesting spots to be right now that Zion's bank is not on my list of
the radar, right?
Yeah. So, but Netflix, the GEs, you have GEV and GE, both aerospace and Vernova.
Lam Research, a lot of people trade that, right?
Yeah, Lam
Deckers.
Research is in there, LRCX, GM, Tesla, Intel. Now that it's a big name.
Yeah.
know,
now that's a mover and a shaker.
IBM's a big name too. I mean, IBM had a relatively strong week despite the weakness last week. It's
most certainly
$5 or
has earnings
$6 from
coming,
highs.
this week also.
Yeah,
It's going to be fun.
couple interesting names.
Yeah.
Good.
All right. Good job out of you.